Hello everyone, UKInvestor2021 here, and welcome to the first of my portfolio updates. My portfolio finished the week at a value of £20,256 and 1 pence. My ISA utilisation is currently at 48%, which means I can further invest another £10,400 before the end of the tax year, which ends in April. It was a pretty rough week overall. It started quite well, at one point hitting an 11.02% return. It then kind of flatlined, and then it very, very rapidly dropped off towards the end of the week, finishing with just under a 9% return on the week. This week I invested another £440. This was purely into ETFs, so we'll start by looking at these ETFs. So first off, we have VUSA, which is a Vanguard ETF of the S&P 500. This is the largest holding in my portfolio. So anytime there's a down week for VUSA, it generally means my portfolio is going to take quite a large hit. So we're almost 1% down this week. However, I did buy approximately £270 worth more of the shares this week. As you can see, it's had a very good year so far, returning almost 22%. And on top of this, it is also a distributing ETF, which means it does pay dividends, and Vanguard announced the dividends this week for their ETFs. So VUSA this quarter is going to pay a dividend of 25.5 cents a share roughly, which means I should get a pretty healthy dividend from this with 136 shares currently. And I'm probably going to buy more before the ex-dividend date, so this will probably slightly increase. The second ETF to look at is Vanguard World, which is the second largest holding of my portfolio. Vanguard World is also down on the week, almost 1%. This will also be paying a dividend at the end of the quarter, end of the month, of 45.2 cents a share. I did purchase more Vanguard World this week, £110 worth. And I'll likely be buying more of this again before it goes ex-dividend again next week. And now on to the last ETF and the last stock that I bought this week, and that's Ivesco's EQQQ. I bought another £35 of this week. Pretty flat week overall for EQQ, finishing 0.5% down, which again isn't really too much of a worry. This year it's returned almost 26%. And this is another ETF, which is a distributing ETF. So I will be getting paid another dividend at the end of the quarter, which will be 26.62 cents a share. So I should have a nice chunk of dividends coming at the end of the month. Hopefully 212 pays them out on time, because that will just go straight back into the portfolio and just get reinvested. Right, let's look at individual stocks. First of all, we'll look at Google, which is the largest individual stock I hold in my portfolio. It is also one of the best performing stocks in my portfolio. So far, the 1 year return on Google has been 85%. And as you can see, it's been on a huge run up all year pretty much, up until this big red candle yesterday. This is due to news which could impact Google's short-term profitability and may impact their near-term growth. First of all, we have the EU filing an antitrust investigation against Google for the use of their voice assistant on Android devices. This is likely just going to result in quite a significant fine for Google, but in real terms, this isn't going to be any major detriment to Google's long-term growth, but it could cost them in the short term. A major update, though, that does affect Google is the Apple ruling. A judge has ruled that the way that the App Store is structured, where Apple takes, I think it's a 30% cut of all purchases through the App Store, is anti-competitive and unfair. So Apple will no longer be able to force developers to go through the App Store with regards to letting customers make purchases. And this is also likely to have a very, very large knock-on effect on the Play Store on Android devices, which is then going to have an impact on Google's revenue. As you can see, Google takes about a 25% cut of all profits through the Google Play Store, which equates to about $9 billion a year, which, whilst Google makes huge sums of money, in fact, Google makes $182 billion a year, this is a very, very profitable segment for Google and could massively impact their earnings per share, at least in the short term. So we're going to have to see how this develops over the coming weeks. So now on to the second stock of the week, which is Facebook. And I think Facebook is the only green stock in my portfolio this week. And as you can see from the stats on 212, it's in fact green by every metric that they list at the moment. Facebook has been on a huge upswing all year. It's the best performing stock in my portfolio and perhaps my favorite stock in my portfolio. They're just crushing their earnings quarter on quarter, and I expect this to continue all the way through the year. And I do think we'll hit this $400 a share either after quarter 3 or certainly after quarter 4 results, unless anything drastic happens. In the news this week, Facebook have partnered with Ray-Bans to release Ray-Ban Stories, which are first generation smart glasses. Whilst I see this as somewhat of a gimmick, I would be tempted to get some myself if the reviews are any good, as it's an interesting kind of prelude into AR/VR tech and introducing yourself into kind of Zuck's vision of the metaverse. However, I need prescription glasses, and at the current price, this would put them at almost a £600 a pair, which to me is just absolutely obscene. So I'm not really sure how well these are going to do for Facebook, but it'll be interesting to see if it does pay off. Following on from this, Facebook have also announced this week that they are developing their own machine learning chip. This is going to handle tasks such as content recommendation to users, and it's also going to improve video transcoding, which should experience the watching and recording of live stream videos in its apps. This is interesting, as I think more and more tech companies are probably going to start to look to develop their own chips, and I think some major cash cow companies like Google could potentially look into even one day opening their own foundries, so they're not dependent on other foundries like Intel or TSM. And I think recent developments both by Facebook and Google in this space, especially with Google's advancements in semiconductor research, this could pay off massively for the major tech companies, especially when it comes to fighting off competitors in like TikTok and Snapchat. So I'll be really interested to see how this develops for Facebook. Now moving on to Amazon. Amazon has had a pretty flat week. In fact, they've probably had a pretty flat year, with a 1 year return of about 9%. It's actually underperforming the S&P 500 at the minute, and is one of the worst performers in my portfolio. It just can't seem to break that 3,500 barrier at this stage, not for very long at least. So we'll be looking for big news or big earnings from Amazon in the near future. This week in the news for Amazon, Amazon has agreed to pay full college tuition for frontline employees. And I think this is pretty spectacular. With more than 750,000 eligible employees in the US, that is one massive college tuition bill. Amazon estimate this is going to be around 1.2 billion by 2025, which is a huge sum of money. But when you're someone like Amazon making over 100 billion a quarter, it's actually not that big a deal. And it's a great way of attracting staff to work at Amazon over competitors such as Walmart, because if Amazon are paying for your college, it's probably very unlikely that you're going to leave Amazon to work for someone else, at least whilst you're studying. On top of this, Amazon TVs have arrived. Amazon have partnered with Best Buy and are now releasing their own branded TVs, which are due to be in stores by October 27. And I think this is kind of an oddity. For me, I see Amazon as an online retailer. But if Amazon think they can further expand their revenue by introducing brick and mortar stores and products in brick and mortar stores, then more power to them. Like they've got to keep trying to grow their revenue. So it will be interesting to see how this plays out. On top of this, Amazon are also developing a new point of sale system, which they're hoping is going to attract small businesses. And this is going to compete with PayPal and Shopify. This basically means, if you're a small business and you want to take card transactions or, any kind of payments for your business, Amazon are going to be launching a platform which will just process payments for you. So it'll be interesting to see how this works. Again, it's just another Amazon thing which they're throwing out there and they're hoping it sticks. Additionally, this week, Amazon are also likely to be the front runner for a multi-year NFL Sunday ticket deal. At this point, I think this is likely either going to go to ESPN or Amazon. I think they're probably the only two competitors that can afford to pay $2.5 billion a year. But I don't think this is going to be a profit driver for Amazon, though I think it is going to be a huge battle between Disney and Amazon with regards to Prime membership or Disney Plus membership. It could be a big draw for people that perhaps don't have either memberships for those monthly subscriptions to potentially sign up. And it could also provide great customer retention if you think you're going to get great sports packages on top of your existing content that you get for your monthly fee. So I think it'll be very interesting if Amazon do win this. I know Amazon have got a lot of sporting content recently, certainly through the Premier League and the other football events, not American football. But yeah, I think this could be good for Amazon, and it's definitely another big draw for a Prime subscription. And in fact, Prime is the only subscription that I personally pay for on a monthly basis. So I'll be very interested as someone that doesn't actively follow NFL if Amazon got this, because I'd likely just watch the occasional game just because if it was available. So I think this could be a great thing for Amazon if it does go through. So that wraps up Amazon for this week. Now on to my smaller holdings, which are AMD. There's not really any news coming out of AMD this week. It is down on the week and is down overall in my portfolio. This is a relatively new position. I don't really know what I can realistically expect out of AMD, especially as there's no major news coming. But the price is trending back down towards this kind of support at like 103, which I think if it breaks down below, I'll likely load up on more AMD. But I do expect this to kind of consolidate all the way through until next earnings, unless there's any major news with regards to acquisitions or things like that. So yeah, not a lot to say on AMD this week, other than the fact it's down, and yeah, wait and see. Just keep accumulating. Now on to Coinbase. And Coinbase has not had a good week. It is almost 11% down this week. Primarily because of the price of Bitcoin being down. The crypto market shat the bed earlier in the week. So Bitcoin's down by almost 10%. Therefore, Coinbase is down by about 10%. And this is kind of how I expect the market to go. This is my way of being invested in crypto without being directly invested in crypto. There was also some negative news coming out of Coinbase this week. The SEC have put the crypto industry on notice. They've warned Coinbase that if they continue with their plans for their lend feature, which is where Coinbase will pay you an interest rate effectively on any cryptocurrency through the lend feature on Coinbase. And the SEC doesn't like this. There's been a bit of back and forth this week with Coinbase calling out the SEC. But in the grand scheme of things, I don't think this is significant. I feel like at the minute, the price of Coinbase is going to be very, very much tied to the price of Bitcoin and the price of the crypto market as a whole. I do think, however, though, if all this regulatory concern can kind of be put to bed, and with wider adoption of cryptocurrency, I think Coinbase is just waiting to explode. I do think that if there's another crypto bull run this year, there's massive, massive upside for Coinbase, and I wouldn't be surprised if we hit this 380-400 mark by the end of the year, if there is a continued bull run for crypto. Because Coinbase is just an absolute money-making machine. Like, the transaction fees are incredible. But yeah, that's pretty much it for Coinbase this week. I will just expect this to continue to consolidate kind of between the 200 and 300 mark, unless there's a massive shift in the crypto market or there's massive regulatory changes which forces Coinbase to basically become unprofitable. But I can't really see that happening anytime soon. So that is it for this week's portfolio review. As you can see, it's been a pretty poor week. Facebook was the only survivor. Coinbase got absolutely smashed. And this is week 35 of my investing journey. And this week I had an absolute return or loss of £195.60, or a relative return or loss of minus 1.28%. And this is the first down week in 6 weeks. So hopefully next week is a green week. Thank you all. Please like, subscribe and comment. And thanks again.